Hi everyone! Welcome back to whoever is joining in again. And those of you who are new, welcome. Good to see you filling in. Grab your coffee, grab your tea, get more comfortable. We got pretty eventful market to talk about today, but before we jump in, quick reminder, I hope you're having a great day. Let me know where you're tuning in from. Leave it down in the comments below. So I can see I know it's been a crazy week for a lot of us. So I wanted to keep it pretty chill today. Just a catch-up session, you know. Let's take a breather together before we jump into all the seriousness. How's everyone doing? Y'all surviving the week? Or is it one of those where you just want to crawl under the covers? Let me know in the chat how you're feeling. Honestly, some weeks feel like they drag on forever, and other weeks are like bam, they're over in a flash. Anyone else's last week been all over the place? If you're just tuning in, we're gonna hang out for a bit, talk about whatever comes to mind. I've got a few fun things in store, but I want to hear from y'all too. You know, don't be shy. Drop something in the chat, whether it's what you're up to, what you're vibing on lately, or even what you're eating. What are you binge watching? Currently, I'm rewatching The Vampire Diaries and I'm so happy because I watched it like 3 years ago and I'm watching it again. Anyone on to some new shows lately? Oh, I'm also gonna watch Harry Potter again. Quick side note though, if the audio is good or if I'm too loud or soft, just let me know so I don't burst your eardrums. And I want to make sure that everything's set up so you guys can relax and enjoy the stream. Let me know if my mic's good. So I'm also planning to do a little Q&A later. So if you got questions about anything live, random fun stuff, or things you're curious about, just throw them in the chat. I'll try to get to as many as I can. No filter here, just whatever comes to mind. Oh, and if you're new to the stream, welcome. Seriously, I'm so glad you're here. We're all about keeping things real and having fun. It's not a pressure vibe. grab a snack, kick back, and let's just chat. One minute is Monday, and now it's Monday again. It's literally last week went by so fast, guys. Just a quick reminder, this is your time just as it is my time. So whether you got a burning question or just something random that you've been wondering about, hit me up. Life, hobbies, weird facts, even stocks, analytics, anything. Let's talk about it, whatever. Lastly, if you're joining us, welcome. If you just joined, don't be shy. This is not a judgment zone. Feel free to jump into conversation whenever you're ready. You can comment down what you're feeling, what you think. No rush at all. I want to feel everyone at home here, no matter what your mood is. All right, I think that's all I've got for now. Let's see where we're gonna go to today. I'm very excited to hang out with you all today. I'm sure you'll have a good time, and I am gonna have a good time. So who's here with me? Drop a hey in the chat if you're ready to kick things off. Let's make this stream a good one. So y'all, do you guys remember when last week I talked about Tesla and some of the key zones to watch out for? Do y'all remember? Any of you tuning in again? I mentioned a key level to watch out for was 455. And I told you very clearly to watch this key level, 455. I broke down the entire logic, the moving averages, the volume structure, the supply zone, the inflection point. I told you that if Tesla followed that structure, the market would naturally push it toward 455. And what happened on Friday? What happened on Friday? Exactly 455. It closed. Not 453. Not 453. No. 455. Not even 558. Not even 458. It closed right on the level we discussed. Why does this matter? I see. Well, because it shows you that the market always leaves footprints. And also because price action is not random. And when you understand the logic behind moves, the market stops being chaos and starts becoming predictable. So those of you who were with me last week, you already knew this move was coming. And tonight, we follow the same logic. We stay ahead, not behind. And I'll continue explaining everything just as clearly, just as transparently. One moment, I'll set my screen so we can actually start this. So, all right, that's enough about Tesla. Let's talk about, anyone can guess what I want to talk about? Yep, I want to talk about Nvidia. Because I know a lot of you are watching this closely. Right now, we're seeing early signs of a possible reversal. Nothing is confirmed yet. We're looking at an early sign of reversal, but yeah, nothing is confirmed yet. But the signals are there. And here's the important part. The Dow Jones is still sitting below last week's resistance levels. That tells us buyers are not fully in control. Sellers might step in at any moment. So it's very important to be cautious because now buyers are not yet in control, and if it goes up to a level where sellers start to be active, it's not a recommended buy. So if you're thinking about buying Nvidia right now, it's not the best risk-reward setup. The upside is limited and the downside is open. The downside is open. So do you know what is the smarter approach? Anyone? For me, I would wait for a clean breakout above resistance, possibly a full candle break, not a wick. Let price confirm strength before you risk your money. If you chase too early, you're buying into uncertainty. If you wait for confirmation, you're buying into strength. Any questions? I want to pull this up. This is actually quite interesting. So, stock market today. Dow, S&P 500, Nasdaq futures steady with Wall Street awaiting expected Fed rate cut. US stock future took a breather on Monday, today, into a pivotal week dominated by Federal Reserve's final policy meeting of 2025. So the contracts of the S&P 500 hovered just above flatline, while those on the tech-heavy Nasdaq 100 rose roughly about 0.3%. Dow Jones Industrial Average futures were a little changed. Markets on the lookout for risk to almost total confidence that the Fed will cut interest at its two-day policy meeting, which will start tomorrow. After a recent surge in optimism, traders now see 88% probability of a cut in Wednesday's decision. So the odds are high. Now, let's talk about the S&P 500. What now? Last week, I told you very clearly, watch the 6,780 level. I said, if 6,780 holds, we consolidate and later recover. But if 6,780 fails, we go into a deeper correction. So what happened? 6,780 held perfectly, and right now it's sitting around 6,780. So where do we go from here? Let me break it down for you. So the first scenario, if we stay above the 6,780, we continue consolidating, building a base, and the market can attempt another higher leg. However, scenario 2, if we fall below 6,780, that opens the door for a sharper correction. Sorry, I said wrong. Right now it's at 6,780. So it's at our target. So now, that opens the door for a sharper correction, something deeper than much painful if it falls below it. Right now, as long as we stay above that level, the market still has room to breathe. But the higher we push without volume confirmation, the more careful you need to be. Remember, this is a market driven by expectations, not safety. So, treat every move with discipline, not emotion. All right, let's get into it today, especially into the rate cut. Do you think, is the market entering the most dangerous moment? But yeah, paradoxically, this is exactly when the market becomes most dangerous. What do you know why? Because when investors think they already know the outcome, market becomes extremely sensitive to any deviation from expectation. Why it's dangerous right now? Let me explain. As we can see here in the news, the rate cut is already fully priced in. Everyone expects a 25 BP cut. This means a rate cut itself won't push markets higher because traders already bought in anticipation. So the real risk is how the Fed cuts, not whether they cut. There are two scenarios. A dovish cut, where market will rallies, power signals more cuts, weaker inflation, an easier policy. And another one is a hawkish cut, where the market dumps. So Powell emphasizes inflation risk, fewer future cuts, or a slowing easing cycle. If Powell's tone is even slightly hawkish, the market could react violently because expectations are so one-sided. When expectations are maxed out, disappointment risk is also maxed out. This is similar to a company beating earnings but stock still falls because expectations were too high. I think right now, stocks are at or near all-time highs. Tech is overbought, and positioning is crowded, and also volatility is low. I think a lot of investors assume soft landing plus smooth cuts. This is the perfect setup for sudden shocks. However, additional global risks amplify the danger. For example, the Bank of Japan may unexpectedly tighten, which history called global sell-offs. The dollar and yen volatility can trigger forced liquidation, and bonds and equities are both vulnerable at current levels. When the system is stretched, even small surprises can trigger outsized moves. So, technical signals also warn of danger. The S&P 500 recently printed a high-level consolidation. So these are classic signs of distribution and institutions quietly unloading into strength. So the bottom line, rate cuts do not automatically mean markets go up. Sometimes the most dangerous moment is right before or right after the first rate cut, because many people expectations, they result in extremism, pricing is complete, and room for an upside is quite limited. And also the downside risk is large. Sensitivity to the Fed tone is also very high in these situations. The higher the market climbs before the cut, the more fragile it becomes after the cut. So let me ask you, do you think the US market will continue rising tonight? Let me know in the chat. I'm gonna have a sip of water. Do you think the US market will continue rising tonight? So as we saw here, we read here, moment. Okay, so this week, the Fed is almost 100% certain to cut rates by 25 BP, but the market has already fully priced this in. The market's direction will not be decided by cut or not, but how they cut. So as I mentioned above, dovish cut, market continues to rise, possibly making new highs, and a hawkish cut, a high probability of a sharp drop. Right now, I think the market is assuming a dovish cut, and if, as mentioned before, if Powell's speech leans hawkish, emphasizing inflation fight, dot plot unchanged, fewer rate cuts than expected next year, then next week the market will likely pull back significantly. But the worst case scenario is a sudden free fall. A more extreme scenario is if the Bank of Japan unexpectedly hikes next week, which is, as I mentioned last week, December 18, 19, they have a meeting, and unexpectedly, if they hike next week, we could see a repeat of global risk asset cash flowing Japan's surprise hike on December 13, 2022. History doesn't repeat exactly, but it often rhymes. We must prepare for the worst case. From a technical perspective, the S&P 500 has shown a series of hanging man and shooting star patterns, a classic high-level distribution formation. Even though the index hasn't dropped yet, high-level concentration itself is a form of distribution. Risks are accumulating. For personal operations, you can consider buying insurance, for example, buying weekly SPX, but options every Friday expiring the same or following week. Controlled costs, if the market drops, you make big money. If not, treat it as a scrap paper. From the current index structure, the market is already entering its most dangerous stage, the game of the brave. And because the entire market's AI narrative has changed, our strategy must also adjust. One clear example, Nvidia's market cap reached 4.5. This is an example. Nvidia market cap reached 4.5 trillion in July. 4 months have passed and the stock price hasn't moved. This means holding such a superstar tech long-term now has very limited return potential. But meanwhile, performance over the same period, let's see. So we'll look at, as you can see, since July, we've been holding within the similar price range, not having any significant moves. But if we take a look at Google, let's see. Since July, Google had plus 80%. Another example we can look at is Broadcom. Since July, they have been an uptrend as well. Let's look at another company, biotech. ETF. Since July, it's also in an upward tunnel with plus 50%. And maybe the S&P 500 is up 10% since July. And Goldman, let's check Goldman, one more important. And Goldman Sachs is also in an upward trend since July with plus 30%. So let's go back to Nvidia. Do you see that Nvidia since July 4 months have passed and the stock price hasn't moved much. This means holding this stock, such a superstar tech long term, has very limited return potential. So it's time to rotate capital into higher value sectors and stocks. Yesterday, the market flashed an important new signal. Adobe, Salesforce, ServiceNow, the so-called AI losers, all surged violently. Let's check. Let's see yesterday. Wow. What we're seeing here. This Adobe. Yesterday's surge. For the past 2 years, these software giants underperformed heavily due to the distribute by OpenAI narrative, but their recent earnings show stable 10 to 15% revenue growth. Their fundamentals are intact, and the sell-off was purely sentiment-driven. Here, this sell-off was sentiment-driven. Also, the Goldman Sachs latest report shows over the past 23 years, the bottom, let's see. Wait, I want to do here. Let's see the monthly. So for the Goldman Sachs latest report shows over the past 23 years, the bottom one-third of large caps underperformers in 1 year have very high probability of performing the S&P the following year, especially in Q1. The strategy only had a 23% hit rate in 2024, but rebounding strong in 2025. Do you see in this year how it rebounded? This was a strong rebound for Goldman Sachs. This aligns let's see, 2023, we go from January until now. We've been seeing a positive rebound. It's strong. This aligns perfectly with my long emphasized mega cap rotation theme. So, in summary, the 3 best strategies in the US stock market right now are, let's discuss. What are the best 3 strategies? Mega cap. So, number 1 that I'm currently for the US stock market, the best strategy. Let me just write here to mention. Mega cap rotation. This is a monthly strategy. So what is mega cap rotation? Every month, buy 2 to 3 mega cap stocks For example, anyone knows what these mega cap stocks are? Comment down below. So these are Apple, Google, Meta, Amazon, Nvidia, Microsoft, Tesla, and so on. But these are some of the key mega cap stocks. This is a short-term mean reversion plus sentiment reset strategy, but done on giant and low-risk companies. Oops. So, I'll write down so you guys can screenshot for later use. So, do you know why it works, this strategy, the monthly strategy? Okay, so because mega caps rarely stay out of favor for long. Big companies with trillion-dollar cash flow don't collapse overnight. When they dip, it's usually due to temporary sentiment, earnings timing, rotation to another sector, and overreaction to news. These typically reverse within weeks. Also, fund managers rebalance every month. Big funds have strict rules. So, these rules are on allocation weights, quarterly performance targets, and index tracing error. So, when a mega cap underperforms, managers buy the dip to rebalance. So, one more thing why it is good for mega cap. Monthly rotations are predictable. There are typically 1 to 2 mega caps left behind each month. These laggers often become leaders the following month. So if you want a performance example, if you perfectly pick the strongest mega cap each month this year, that's 173% annualized return. But even if you're not perfect, 50 to 60 accuracy still gives you 80%, around 80% annualized. Risk is low because you're only rotating among giants with stable fundamentals. So why this is good? The key point, because risk is low because you're only rotating among with So these trillion-dollar companies, they don't go broke overnight, guys. Let's see. So do you know this strategy works extremely well during sideways or rotational markets, like now. So let's look at another strategy you can adopt. The loser trade. This is a yearly strategy, and what this is at the end of each year, buy large cap stocks, maybe above the 100 billion market cap, with strong fundamentals but big performance for the year. So this basically at the end of each year, buy large cap stocks, anything above the 100 billion market cap. So what? But these companies have to have strong fundamentals, but A key is to watch for weak performance for the year. These often are called you can use the term fallen angels. These are often called fallen angels. That institutions buy back early the next year. So large companies will pay attention to this. That's why you have to pay attention, because if you're late, then these companies have already purchased up at the low price. So why this works, make it smaller. So why this works? Year-end tax loss harvesting. Often funds sell losing positions in December to realize tax benefits. This pushes these stocks too lower than fundamentals justify. Also, the January effect, Q1 rebound. After December selling pressure ends, hedge funds rebuy positions, retail tax sellers rebuy, valuations desk identify bargains, and sentiment resets. These stocks often outperform sharply from January to March. We also can look at 23 years of data to confirm it. Historically, the worst performing one-third of large caps often beat the S&P in the following year, especially in Q1. The effect is strongest during rotation periods like 2025 going into 2026. The key filter, not all losers are good losers. Only buy, okay, I'll write this for you so you can see. Only buy companies with stable revenue, healthy profitability, and major competitive. Also, you can look at one more, which are oversold due to sentiment. Sentiment, not due to so only buy companies with stable revenue, healthy profitability, major competitive advantages. Major competitive advantages, and that are oversold due to sentiment and not due to any problems to structure. So let me give you some examples for this one. Meta. I just want to check something here. Sorry, my mic went out of battery. So, rotation is the real story. While everyone else is staring at the same few AI names, the real money has already started rotating. So the 2025 slow movers will be the 2026 leaders. This is not a theory, it's a cycle pattern. If it happens over and over again. And those of you who understand this early will be positioned far ahead of the others, and you're far ahead of the crowd. Trade with precision, not emotion. We talked about, let me see. So we talked about and we broke down the levels, the setups, and the timing. But the most important mindset is we don't gamble, we don't chase, we wait for confirmation. There's nothing more expensive in the market than impatience. So, protect your capital. That's your ammunition. In high-risk weeks, the best traders focus on survivor, not glory. Sometimes the best trade is letting others fight the battle while you prepare for the next one. So, the capital that's preserved today are opportunities multiplied tomorrow. Thank you, and a reminder, before we end, I genuinely want to thank you all who joined the live stream tonight. Your support, your questions, your participation, that's what keeps this community strong. If you found value in today's stream, drop a like, share the stream, and make sure you're subscribed so you don't mix the next market update or just a discussion with me. And it would really make my day if you could hit the notification button so you get updated every time I post. I'm here every day to help you navigate and see signals, move with clarity, and not chaos. So remember guys, we don't need to trade every day. We only need to trade on those days that matter. The goal is not to catch every move. The goal is to catch the right moves, the ones with certainty, probability, and a systematic on our side. Next week might be volatile, next week might be messy, but next week will also bring opportunity, and we'll be ready for it. Stay focused, stay disciplined, stay patient, and as always, only trade when the odds are in your favor. Thank you for all being here. I appreciate everyone, every single one of you. See you in the next stream.